Good morning, student. From today, we are going to start a chapter number 11 of Accountancy Part 1, Bank Reconciliation Statement. Friends, we know that banking services are very essential and important for any business or a trader, and that is why most of the traders are opening an account with the bank, and whenever they open an account with the bank give them a statement or a book which is known as passbook. What is passbook? Passbook is a copy of customer's account in the books of bank, where the transactions effected by that customer are recorded. Customer is doing two kind of transaction with the bank. By any way, either he is depositing money in the bank or he is withdrawing money from the bank. So both kind of transactions are done and they are recorded in the book by the bank, and that book is known as passbook. Passbook is given by bank to the customer. What else? We know that customers means the trader, the businessman, they are making their cash book, or sometimes they are keeping cash account to record the transactions of bank. Right? We have already studied 3 columnar, 2 columnar cash book, where we have seen there is a column of bank. Right? It is having two sides, receipt side and payment side. Anything which is increasing our bank balance is recorded at the debit side or receipt side. Anything which is reducing the balance, it is recorded at the credit side of bank. So friends, whatever transactions are done with the bank, both the parties are recording such transaction, whether it is customer, that is businessman, or bank. Right? Now, if both the parties are recording those transactions without any error, means they are carefully recording all the transactions, the balance should get tallied. That means the balance as per passbook and the balance as per cash book will get tallied, will be the same. Sometimes what happens, because of ignorance or because of some error or omission of transaction, one party record particular transaction and one party doesn't, and that create a difference between the balance as per bank book, balance as per passbook, and balance as per cash book. So if the balance as per cash book and passbook are same, then it is okay. But if the balance as per cash book and passbook are not same, then it is a need to find out the reason of differences. And when we find out the reason of differences, with the help of those reasons, a statement is prepared, which is known as bank reconciliation statement. So this is all about the bank reconciliation statement. Why it is prepared? It is prepared to reconcile the balance as per cash book and balance as per passbook. Right? Passbook is given by bank to the customer, that is trader, and cash book is maintained by the trader himself. Now all the transactions are recorded by both the parties, whether it is trader or the bank. So the balance should get tallied, balance as per cash book, which is maintained by trader, and balance as per passbook, which is maintained by bank. But if there is a difference in the balance of both the books, then we need to find out the reasons of differences. And after detection of reasons of differences, with the help of those reasons, we prepare a statement. We means trader prepares a statement which is known as bank reconciliation statement. Bank reconciliation statement is prepared to reconcile the balance between the cash book and passbook. Okay, let us see. Passbook. What is a passbook? Passbook is a copy of trader's account in the books of bank. And what is bank column of cash book or bank account? It is a bank's account in the books of trader. Passbook is maintained by bank, means in passbook entries are done by bank, and in cash book entries are done by trader. Okay, we have already seen the specimen and method of preparing cash book, how to prepare cash book, how to record transaction in cash book in the chapter of cash book, chapter number 7. Here we will be seeing the specimen of passbook. Generally a passbook is having these columns. The first column is of date, where bank is mentioning the date of transaction. Second column is of particular. In this column they record the thing by which the balance is increase or decrease. If balance is increased because of some check, so that check number will come, or if it is deposited by cash, then cash will come, or if any withdrawn is done, the name of person will come here, right? This check number, when a trader is issuing any check from his account, the check number is shown in this column. Amount withdrawn, if amount is decreasing, that means balance is decreasing by any way, then it is recorded in this column, debit. And if any amount is increasing the balance, it is recorded in this column, that is credit. Which means, suppose bank is receiving money on behalf of trader, then they will be writing in the credit column. Or if bank is paying money on behalf of trader, then they will be writing in the debit column. And then after the column is of balance, this column shows the net balance after any particular transaction. After recording each and every transaction, we find the net balance on that date, particular date. And finally, the last column is of sign of bank officer. Normally, if it is computerized, then banks are not keeping this column. But earlier, when they were not issuing the computerized print, at that time the last column was of signature of bank officer, where bank officer was signing. So this is the specimen of passbook. We don't need to do anything with the specimen of passbook. This is just given for the information, right? Now let us talk about the balance. We know, we are very much aware with the term bank overdraft. Bank overdraft. What is bank overdraft? When permission is given by bank to withdraw more amount than your actual balance, and you are withdrawing more amount than your actual balance, it is known as bank overdraft. Simply you can say that negative balance in the books in bank, right? Bank gives this offer or this service to the current account holder, and not to all, only to those businessmen whose credit score is good. So here we may have a bank balance in our bank, or we may have a bank overdraft in the bank. So let us see what is bank balance and bank overdraft. When there is a bank balance, when the receipt side total of bank column of cash book is more than the payment side total of bank column of cash book, that difference is known as bank balance. And what is bank overdraft? When the payment side bank column of cash book is more than the receipt side bank column of cash book, the difference is known as bank overdraft, right? Now these two parties, bank and the businessmen, they are recording transaction by giving opposite effect. That means for whatever transaction businessman is debiting bank account, the same transaction bank are crediting in the account of customer. And for whatever transaction businessman is crediting bank account, the same bank is debiting to the customer account, because they are opposite parties. Say for an example, we are customer and we are depositing amount to the bank. So what will be the effect? Bank will be receiving money and we will be giving, right? So money is going out from us and it is received by bank. So opposite effect to two parties, bank and customer. So opposite effect they give. Whatever amount they debit, we credit them, and whatever amount they credit, we debit them. Or else whatever amounts we debit, banks credit them, and whatever amount we credit, banks debit them. Okay, so every time there will be a opposite balance. If cash book is having debit balance, bank, that is passbook, will be having a credit balance if all the transactions are recorded correctly, right? And if cash book is having credit balance, passbook will be having debit balance. So friends, now the conclusion is that we may have two balance, bank balance or bank overdraft. What is bank balance? Bank balance is the debit balance as per cash book. What it is? Debit balance as per cash book, or else credit balance as per passbook. So debit balance as per cash book or credit balance as per passbook means bank balance. And bank overdraft, credit balance as per cash book or debit balance as per passbook. So here it is written, debit balance as per cash book or credit balance as per passbook means bank balance, and credit balance as per cash book or debit balance as per passbook credit balance as per cash book or debit balance as per passbook means bank overdraft. Okay friends, right? So these two terms are important, two things are important. One is cash book and one is passbook. Let us see the meaning of bank reconciliation statement, which we have already discussed. Bank reconciliation statement means a statement showing the causes of difference in the balance of bank as per cash book and as per passbook for a particular time or on a particular date. Okay friends, now who prepares bank reconciliation statement? So bank reconciliation statement is always prepared by trader for himself, right? Bank does not prepare bank reconciliation statement for you. You have to prepare for yourself. So bank reconciliation statement is prepared by whom? By trader. What else? Bank reconciliation statement is a statement. It is not an account. It is not an account. It is a statement. So bank reconciliation statement is not an account. It is a statement, and bank reconciliation statement is prepared by trader. Moreover, bank reconciliation statement is prepared to reconcile the balance between cash book and passbook. It does not rectify the error. If there is any error from either side, bank reconciliation statement will not rectify that. Bank reconciliation statement will show the cause of difference. Bank reconciliation statement will show the cause of difference of that because of that error. Okay. Now, one more important thing is to keep in mind, even though the balance as per bank passbook and cash book are same, are tallied, then also there may be a need to prepare bank reconciliation statement. The reason is, though the balance are same, but the details of the transaction may be different. it is possible that some transactions which are not recorded in cash book, and there are some transactions of same amounts are not recorded in passbook. So the transactions are not recorded with the same amount, with the same effect, either withdrawing of money or depositing of money, or increasing the balance of bank or decreasing the balance of bank. But transactions are not recorded, still the balance are same. But here also there is a need to prepare bank reconciliation statement. So you can say it became mandatory to prepare bank reconciliation statement. Okay friends, now next lecture we will be looking for the reasons of the difference between cash book and passbook. Right, also we will be learning about the objective of preparing bank reconciliation statement. Thank you.